I know there's some confusion, and because I'm expecting the stock market to turn around and move to the downside, but I'm also expecting gold and silver to move to the downside into, approximately March on average. And I know a lot of people think, well, my whole idea in buying gold and silver was that it would be, it would move up while the stock market moves down. And I'm here to tell you that is not necessarily the case. Now, I'll get back to these miners in 2 seconds, but I want to show you. Where do I have that? I think it's here. I want to show you an old correlation map between the stock market and gold. Let's see if I still have it. Yes. So the blue item is the S&P-500, the ES contract. And this is going all the way back to 2011, 2010. And the orange item is gold. And notice that gold did move down while the stock market moved up from August of 2011 through about December of 2015. But then there was a period from December of 2015 all the way through January of 2018 where both of them generally were moving to the upside. Gold, obviously not as strong as the stock market. But they were positively correlated. They were really quite positively correlated. And the S&P took a small dive right here. The gold took a much larger one. But they were still moving down at the same time, and then they were moving up together from there. So positive correlation for 2 full years. And then starting from January of 2018 through December of 2018, they were oppositely correlated. So notice that during that middle section of that year of 2018, stock market was moving higher, gold was moving lower. So they were opposite correlation. Then for a short period of time, they were positively correlated here. Then the stock market continued higher, gold moved lower, but opposite correlation. And if you were going to draw a correlation, decide what, since May of 2019, if someone said the stock market and gold have been highly correlated, I bet many people would be surprised. But as you can see, the stock market generally been moving to upside, and so has gold. So I think that people need to get this idea that gold and silver stocks are going to save them while the stock market is crashing completely out of their head, because that correlation doesn't necessarily hold at all the time. It ebbs and flows. And I just think it's the better way to look at that is that they move somewhat independently. And there are times where you want to be in gold and silver and the miners, and there's other times you don't. And during those times you might even want to be short the sector. And so I wouldn't necessarily count on gold and silver being highly correlated with much of anything. If anything, it would be, a much better correlation might be where if the U.S. dollar is going to be moving lower, then you can expect silver and gold to move higher. That would be a better correlation than with the stock market. But and I talked about this a long time ago, but the best correlation I can find, when you move back to that, best correlation I can find is the Australian dollar in gold of anything out there. And even that has broken down recently. Here's Australian dollar gold. Look how nicely they moved together for an extended period of time until August of 2018. Gold moved up, Australian dollar down. They lost their correlation in August of 2018. So are they kind of trying to grab that correlation and come back together? I think so. And so I think looking at the forward roadmap on the Australian dollar is going to come back into play if you're a gold and silver trader. Heck, even gold and silver diverged for a little while during the last part of 2018, the early part of 2019, where silver moved sideways, gold moved up. So these correlations ebb and flow. Well, where's the U.S. dollar? Surely I've got that in here somewhere. Well, I do have the Swiss franc in gold. So this kind of would be the same idea as of the gold being highly oppositely correlated to the U.S. dollar. So this would be the direct correlation with Swiss franc. And as you can see, these have traditionally been fairly nicely correlated. But there was a period from starting at gold's major low in the third quarter of 2018 where gold moved higher and Swiss franc moved lower. And even the Swiss franc's kind of been moving sideways while gold moves strong higher. So these correlations, they just can't be counted on. And that's why I guess my main point is I think the greater success, the better approach, and one that's been more successful, at least to me lately, is to look at gold and silver as relatively independent items, and the miners as well, and not absolutely count on the old correlations necessarily to match. To be honest, I think my wave count in Hearst has been dynamite. I mean, tremendous on gold and silver and the miners for a couple of years now. There was a period where things weren't going so good. Hearst really didn't call for this plunge that from July through September of last year very well, and that was a miss. Nobody's perfect, but ever since then, things have been going really well, just forgetting about the correlations and not counting on them and trading what the charts have to offer when you have a combined analysis of Hearst and Elliott wave and Fibonacci. So is it possible that the miners move down while the stock market is moving down? Absolutely. Sometimes they're correlated.